Let me ask you something. If you had some extra money today, where would you put it? A house or the stock market? Some people say real estate is the safest way to get rich. Others say stocks grow faster. So who is right? Today. We're going to break this down in a very simple way. No confusing words. No boring lecture, just real talk. And by the end, you'll know which one actually builds more wealth for you. First, understand one simple thing. Both real estate and stocks are just tools. They help your money grow. That's it. But they grow in very different ways. Think of it like this: stocks are like planting seeds in many places. Real estate is like owning a piece of land. Both can grow, but the journey feels different. Let's start with stocks. When you buy a stock, you're buying a small piece of a company. If the company grows, your money grows. If the company struggles, your money can drop. Simple. But here's something important: stocks don't grow in a straight line. They go up, they go down, and sometimes they move sideways. And this is where many people get confused. They see their money drop, and they panic. They sell, and that's where they lose. But the people who win are the ones who stay calm. They don't react to every small change. They trust the long-term growth. Now, real estate. When you buy real estate, you're buying something physical. A house, an apartment, land. Something real. You can live in it. You can rent it. You can improve it. And you can sell it later. And here's why many people love real estate. It feels safe because you can see it. You can walk inside it. It doesn't disappear overnight. But let's be honest, real estate is not always easy. You might deal with tenants who don't pay on time, repairs that cost money, time, and effort to manage everything. So while it feels stable, it also needs involvement. Let's go back to Ali and Sarah, because their story explains everything. Ali invests in stocks. At first, it feels exciting. His money grows quickly. Then suddenly the market drops. He feels nervous. He checks his phone again and again. But instead of quitting, he keeps investing. Slowly, over time, his money recovers and grows even more. Now Sarah, she buys a small apartment. At first, things are smooth. She gets rent every month. It feels great. Stable. Predictable. But then one tenant leaves. The house stays empty for a while. Then something breaks, and she has to fix it. So her income is not always perfect. Now look at this carefully. Ali faces emotional ups and downs. Sarah faces real-life problems, different challenges. But both are normal. Now let's go deeper, because this is where people really understand wealth. There are actually 3 ways your money grows: growth, income. See how both options perform. Growth stocks usually grow faster. Because companies grow. New ideas, new technology, global expansion. Your money grows with them. Real estate grows too, but mostly because of location and demand. So in pure growth, stocks often win. Income. Real estate gives you rent every month. It feels like income. Stocks can give dividends, but usually smaller and less predictable. So for income, real estate wins. Time. This is the most powerful part. Time makes both powerful. If you stay invested long enough, both can build serious wealth. But most people don't stay long enough. They quit too early. Let's talk about one more thing: leverage. This is where real estate becomes powerful. You can buy a property using a loan. You don't need full money. So you control a big asset with less money. If the property grows, you benefit from the full value. Stocks don't work like that. For most people, you invest your own money. So growth is direct, but slower in that sense. But here's the trade-off: leverage increases risk too. If something goes wrong, the pressure is higher. So it's powerful, but needs care. Now let's simplify everything. If you want fast growth, easy start, low effort, give stocks are better. If you want monthly income, physical asset, long-term stability, gives real estate is better, but the smartest move. Balance. Do both. Think about it like building a system. Stocks grow your wealth in the background. Real estate gives you cash flow. Together they support each other. Now imagine this. Ollie starts adding real estate later. Sarah starts investing in stocks slowly. Now both of them are stronger. More balanced. More secure. And this is what most successful people do. They don't depend on just one thing. They build multiple streams. Now let's come back to the main question. Which one actually builds more wealth? Pause. The real answer is simple. The one you stick with. Because the biggest mistake people make is not choosing wrong. It's quitting early. They start stocks, then stop. They buy property, then give up. They jump from one thing to another. Wealth doesn't work like that. It rewards consistency, not perfection. So don't stress too much about choosing the perfect option. Start with what you can. Learn as you go. Stay consistent, because in the end, it's not about stocks versus real estate. It's about discipline, patience, time, and if you master these, you can win in both. So start small, stay consistent, and let time do its magic. Pause, and that's the real game. Simple, calm, and powerful.